Thank you so much, Dan, and thank you, Investing, for having me here today. And it is such a pleasure to speak again for you guys. And thank you, everyone that is attending today. My name is Anka Metcalf, and I will be sharing with you today how you can literally generate $500 a day with a $5,000 account. And actually, I have a big surprise for you because you could actually generate more. So throughout this week, I'm going to show you my trading results with trading just one contract. But before we continue, I want to share a little bit about myself. So for those of you that don't know me, I'm a professional independent trader, and I started trading on my own about 13 years ago, and I day trade stocks, futures, and currencies as well, and I swing trade as well. But before that, I come from investment banking, so I have a 10+ year of investment banking experience, so I've done this professionally for a long period of time. I'm also the CEO and founder of TradeOutLoud.com, which is a trading firm specialized in educating individuals how to day trade and swing trade stocks, futures, and Forex. And also, I'm the designer of an institutional proprietary trading system, which is based on price support resistance, specific trigger times, specific price zones, chart correlation, a strict set of trading rules, and a 10-point scoring system that enables traders to streamline their trading process, the entry process, the trailing process, etc. So why am I the designer? I didn't invent this system. I have adapted the system from the institutional standpoint for the retail trader. So it is a system that I trade on my own. So for those of you that want to get in touch with me, you can visit our website at TradeOutLoud.com, and also if you want to find out more information or if your questions will not be answered due to the time constraint today, you can also email me at info@TradeOutLoud.com, and also you can get a hold of me on social media where I post a lot of trading ideas, invitations to webinars, and educational events as well. And for those of you that are interested in trading futures or swing trading stocks, you could visit my YouTube channel, which is youtube.com/TradeOutLoud, where I post a weekly overview of the market and also my swing trade ideas for stocks for the upcoming week, and that is posted usually on Sunday or Monday morning before the market opens, and also my pre-market game plan, which is posted around 9:15 every single market morning, so before the New York session starts. Here's our agenda for today. Why should you be interested in trading futures? And I'm going to talk a little bit about the account size and what are the minimum requirements for you to trade futures and how much you can make with the minimum required fund. Also, I'm going to explain to you the advantage of the buying power of trading futures. I'm going to share with you my trading universe, which is not vast at all, and it doesn't require any scanning. So we're going to talk a little bit about gaps. We're going to talk about tax advantages and how you can make money trading futures. Last but not least, we're going to talk about futures commissions, futures liquidity. But before we even dig into all of these matters, I want to ask you a real question, and it's not that I want to ask you a real question. You should ask yourself this. Are you serious about trading? And are you interested in achieving your trading goals, or are you committed to achieving your trading goals? Because you see, when I started trading professionally, my mentor asked me, and he asked me whether I'm interested in achieving my goals or if I'm really committing in achieving my goals. And obviously achieving your goals when you're trading professionally ends with big bonuses, right? So was I interested in getting that extra money, or was I committed to work for it? So if you're interested, if you're just interested in it, you can literally come up with stories of excuses, of reasons and circumstances why you're not going to get there. You're going to get all these excuses of why you cannot trade, why you will not trade, why you missed the trade, or why you're not educated. So you're going to come up with a series of circumstances that are going to create a negative impact on your trading. But if you're committed and you're going to say, you know what, today's the day when I'm going to step aside, and I'm not going to be that eternal student that, jumps in from webinar to webinar, from class to class to find out more details, and I'm committed. I found a system, and I think this is going to work for me because it fits my lifestyle, it fits my psychology, because trading is so personal. you gotta fit, you have to find either a mentor and a system that it works for you, because if it works against you, it doesn't allow you to develop good trading habits. So if you're really committed to making trading work, to making trading your full-time career or part-time career, because everybody's goals are different, whether you want that little extra income that should come your way for, to go on a vacation, or to remodel your home, or to repair your car, or whatever your needs might be, you have to be committed. Or whether you want to, and go big and grow your account and grow your retirement account. Because guess what, guys? Look at the healthcare costs that are going to hit us next year. I mean, they're astronomical. Okay, so you got to ask yourself, is day trading or swing trading futures right for me? And I'm here to clarify some of the issues, and maybe you're going to find, that trading futures might be more attractive than trading stocks or trading any other instrument. So, do you have a full-time job? If you have a full-time job, it means that you have limited availability to sit in front of the computer and watch charts. So you have to think about a schedule and a system and a trading system that will work around your schedule. And guess what? If you want to trade the New York stock market, well, guess what? It opens at 9:30 and it closes at 4. You can't take trades in between. So if you miss an entry at 9:30 or 10 o'clock or 11 o'clock, guess what? Tough luck, because you didn't get the trade. You're not in the trade. You're not in the swing trade. And obviously you're not in the day trade, because if you work a full-time job, it's impossible for you to take a trade. How about if you have limited capital? Let's say if you want to day trade, and if this is your ultimate goal, you need to have more than $25,000 in your account, right? And trading with a prop firm, I don't think that's a good option. And why would you share your hard-earned money with someone else? Because you're going to give away 20%, 30%, even 40% of your profits to someone else, right? And not only that, but you know what? The only people that are making money in this prop trading business are your prop brokers. So if you're serious about wanting to learn a skill, a system that works for you any time and day, close to 24 hours a day, I think you should focus on the futures market. The futures market offers you a lot of leverage, and we're going to discuss in this presentation a lot about the advantages of trading futures. It's literally you pick the time to trade, okay? And trading is not as aggressive as it is in trading in day trading stocks, or even in swing trading stocks, and with limited risk. You even have lesser risk. So it is a trading system that is built around your busy schedule. It's not like I got to buy it here, buy at market, sell at market. No, you could actually put in limit orders. And I'm going to show you how I trade and how I achieve the results that I achieve. So literally it comes to, do you want to supplement your income, or do you want to generate an income? So these are questions that are going to help you go from am I committed, or am I or am I just interested in, okay? And this is probably going to jumpstart your trading career. So let's talk a little bit about the account size, okay? So if you are interested in day trading the stock market, okay, you need probably about $25,000, But if you want to trade futures, here's the thing. One of the reasons many traders gravitate towards trading futures is the relatively low startup cost. For example, you're usually required only about usually requires about $30,000 to open a stock day trading account, and you must maintain at least $25,000 to keep your day trading status. Here's why. If you fall below the $25,000, you're done. You can't day trade anymore. You can't, okay? So all you have to do is swing trade in that account. So you're done. So your day trading career goes out the window. So you only can take about 2 to 3 trades, 2 to 3 trades per week. But the futures market allows you to open an account for as little as, you see it right here on the chart, $5,000, and best of all, you do not have to maintain that amount. So As long as you have sufficient cash in your account to cover the margin requirements to trade the commodity, you can actually have a balance of $700 to $800, and guess what? You can still trade futures. And you know why this is so great? It's because if you're a day trader or if you're a futures trader, and if you're a beginner futures trader, at the beginning stage of your career, you're going to incur some losses. And you're going to still be able to trade your $5,000 account and be able to grow it if you have a strategy, if you have a good strategy, if you have a plan, and if you know your entry points, your exit points, and if you know your targets, okay? So it's all about knowing, knowing how to trade. Let's talk a little bit about the advantages of buying power, and I'm going to get to questions because that's why I've been pausing a little bit. In Thinkorswim, I have an account with Thinkorswim, and many of my clients have accounts with Thinkorswim, and $5,000 is the minimum requirement to open. Unfortunately, I don't. Frank? Okay. Okay, so the advantage of buying power. Let's take, for instance, I have two examples right here. So, for example, if a trader wants to day trade the Qs, which are priced, let's say, at $100, okay, which the way the market is moving right now, it may be heading really quick to $100, but a trader needs about $5,000 to buy, guess what, 50 shares. If the price goes up 50 cents, your profit is the whopping amount of 25 bucks, because each penny is about $50. But if the trader wants to day trade the E-mini NASDAQ, which is priced at 4440 hypothetically, the trader only is required to have $3,960 to buy one contract. Okay, so if the price goes up 50 points, you're going to profit, guess what, $1,000, because each point in E-mini NASDAQ is $20. Okay, so let's take a look at some charts, and I have two slides here, these two upcoming slides. First one is NQ, and the next one is the Qs. So I have two examples, so please look at the charts. You can see the moving average right here, and by the way, this is the 200 moving average. You can see the top, the double top right here. And based on our strategy that we teach in our course, our entry was 4430. Our stop was above these highs right here at 4435. We had a risk of $100, obviously, with one contract. And our target, our first target was 4440, and our target 2 level was 4390. So it did reach our targets, which we trailed out. And bottom line is that we made 35 points in this particular trade alone. And it took us about an hour for this trade to develop. It was about 45 minutes. So we made about $700 profit in that less time. So the profit is, you can see, 7 times the risk. So we risk $100, we made $700 on this trade, using only $3,960 in buying power. And this is with one contract. One contract. Now, I changed the slide. You could see the double tops right here, and this is a chart of the ETF, the Qs. And you can see the double top right here, applying the same strategy. Obviously, we did not take this trade because I'm day trading futures, but if I was to day trade the Qs at this point, based on the same strategy that I would trade futures, I would pick my entry at 108.20, right here where the arrow is, and I would place my stop above these two highs at 108.40. I would use a $200 risk because I want to take 1,000 shares, and I have a 20-cent stop, so that's a pretty tight stop, especially for the Qs and especially for this price range of about $100, okay? This is a 2-minute chart. However, the buying power that I need to trade the Qs is $108,000, a little over $108,000. My target one, based on the same strategies, is at 107.80. You could see it right here, and at 107.40. Okay, these are our target areas pre-calculated before we even get into the trade. Our reward for this trade, so we had follow through in this trade, and the trade worked. So the reward would be 80 cents this is great because when you're day trading, this is the kind of fluidity and this is the kind of follow through that you need in order to make money. But you need a lot of size to make money, right? And you need a lot of buying power. However, the profit was $800, which is good, right? Because we risked $200 and we made $800. So basically, our profit was 4 times the risk, which is $800, right? So what is the downside here? The downside was that we had to use for this day trade $108,000 in buying power versus $3,960 in buying power. So which one would you pick, right? Needless to say, imagine this. If you would have traded futures with $100,000 in buying power, you could have taken the same trade with 25 contracts. Now, 25 contracts, multiply that by $700, our reward from the mini NASDAQ trade that we took. Profit with the same buying power as the Qs. So remember, if you would have used, hypothetically, I'm just saying hypothetically, not that you would take 25 contracts, right? But hypothetically, you could have made $17,500 in about 45 minutes, okay? 45 minutes using the same buying power. So I love to use my buying power wisely, and that's because I swing trade stocks and I day trade futures. So I love to use it wisely. I need my buying power for swing trading. I trade both from the same account. And I love to use it wisely. So why would I use $100,000 in buying power where I can get multiple contracts if something sets up, let's say in cocoa, let's say in bonds, let's say in mini NASDAQ, let's say in lean hogs or whatever it is. And I could take 5 or 6 trades in all those commodities and all those minis versus, you know, loading up in day trades and trading Apple and trading NTAP or AMD or whatever it is. Okay, so it's unlocking your buying power. So you have buying power left to do whatever you want with it. So if you're a day trader and a swing trader, you can use your buying power wisely. Here's some examples of the trades that we took, and we're going to get into some examples that actually are very recent as of this week, because this week we have had some really big moves in the market. And actually today, and we're actually minutes away from FOMC right now. So, and election, and we have some Friday jump numbers, so it's going to be really tough. So this is what we do right here. For instance, this is one of our entries, and this is what we teach in the class. We have a comprehensive course on futures and how to trade it, and we teach advanced technical analysis strategies, and we teach precise stops, we teach precise entries, and how to calculate targets, which is super, super important, okay, super important. And also, we also teach price times and price zones. So these are very, very important strategies that we teach that enable you to pick up the trade early as 9:32, as early as 9:35, as early as 9:45. We actually have, these are 3 of our basic strategies from trading the open. So in this trade, I had a 2-point risk. It was a quick scalp. I had a 2-point risk, and I made 5 points. Rewards. I loaded up because I know my areas precisely. So I know when to get in and when to get out. Quick, very fast. It happened in a couple of minutes, 2 to 3 minutes. This is the result right here. If you would have taken this trade with 1 contract, you would have made $255. Again, another strategy, and this is, you can see it right here. This is a 2-minute chart, and this is my entry bar right here, right off the open. I'm not waiting for a setup. I'm not waiting for that green bar to take out the red bar or to set up or a buy pocket or a sell pocket. Oh, I wait for those as well, but in different conditions, but not necessarily at the open. And especially that I like to trade from 9:30 to 11 o'clock. So I like to be done very early. So basically my homework starts at 9 o'clock. That's when I come in front of the computer. I do my analysis until 9:30, and then I am really focused. I'm in the zone because I want to be done by 11 o'clock. Sorry, I just had to have a sip of water. Okay, so this is the result with two contracts. So as you can see here, my entry was here, 47.80, and I had a risk of $200, and I made $630 on this trade with two contracts. If I would have taken this trade with one contract, I would have made $315. So with one contract and one trade. Do you have losing trades, or do I have losing trades? Obviously, everybody has losing trades, but my losses are very, very, very small, and I know when to sit on my hands. For instance, yesterday, I didn't take any trades. I didn't. Although the market had that really nice big flu and moved to the downside, I didn't take a trade because it didn't fit my plan. Here's another of my trades. This is CL and this is oil, crude oil. My entry 49.30. The risk was $200 and the exit was 49.70. This is the entry right here. And as you can see, it jumped higher and covered. One contract. You could see it right here. One contract. These are real results. You could see when this trade was taken. It was October 27. It was last week. $430 in oil right here. Here's another example, and this is also from last week, and these are also with one contract, just to prove to you that you can do it. And if you have a loss, remember, because losses happen, losses are not going to be greater than $200 or $250, okay? And take a look at the results. So this is copper. Copper had a really great daily setup and a really good day trading strategy on copper. So I took one contract here at 87. I took one contract here. Actually, you could see my entry price is 2.15, and it was actually a day trade that was looking that it was developing that fluidity, that streamline, that follow through, and I took the trade here. You could see it right here at 15,450. 15,450. Very tight. Look at my stop. Look at my stop below these lows right here. This is my stop, literally $87.50. I'm not lying. Okay, $87.15. By the end of the day, not literally by the end of the day, but by the end, when I took this snapshot, this image right here, I took it at 12 o'clock. You could see the timestamp right here. I took it at 12 o'clock, and I already was up $262.50. $262.50 with one contract. Do you want to see copper? I locked in $1,612 yesterday. I locked in $1,600 yesterday in copper because my little day trade transformed into a swing trade. Why? Because it offered me follow through. It offered follow through. So why would I get out if I have a trailing strategy in place? And because futures is a continuous market, why would I get out of the trade just because the day is over? Guys, we're not trading stocks here, okay? This is literally the best thing for me that fits my plan, the best trading environment. I love to trade futures because it offers me the flexibility to trade and to trail. What would have happened? Okay, let's say you're in a stock and you're trading a stock. Okay, you're trading a stock and it's running higher into the close. What do you do at 4:30? If you're a day trader, you get out of the trade, right? Right? You get out of the trade. There's no way to lock in profits because stops are not going to hold overnight. What are you going to do? Transform it into a swing trade and carry it overnight? What happens in the next day? It gaps down below your stop. And guess what? Because you don't have a stop, you have a mental stop. It gaps down below your the stop that you had in mind, right? What are you going to do then? Well, these things are not going to happen with futures because you have hard stops in, day out, 24 hours a day. Day in, day out, 24 hours a day. Here's another trade in CL, and this was also from the 27, one contract. You could see the entry right here, $49.66. This is the entry bar, and actually this is where I got in at $49.66. And you can see that the trade was still working, but I had a 6-point stop. Guys, 6-point stop, that's $60. $60. How tight? It cannot get any tighter than this. Okay, so $290 with a 60. I could have killed the trade right here at 50 bucks, right? Which I did, but I killed it. Killed it at 50 bucks. Okay, so you risk 60 bucks, but you make 290. So it's all coming to predicting the right move and having the maximum accuracy that is going to work on your favor. We teach the best areas, where to buy and where to short. We know these areas. We know the price points where institutional buyers and sellers have interest in. Guess why? Because I was one of them. I know where I would buy it, and I know their strategy. I know what my former colleagues would do, and that's what I'm doing. And I'm respecting my places where I place my stops. You see how I place my stop in copper? Had a very tight trade. You can't get it any tighter than that. Okay. Sometimes you get stopped out, but guess what? Your stops are small compared to your wins because of the strategy that I use. So I teach you exactly where to take profit. And why is that? Because I teach you how to calculate targets. Guess what? If NQ would have ran higher, hypothetically, now it's dropping, but hypothetically, let's say that it would have ran higher. It made a new high on the year. What would be your profit target? Not having any other pivots on the left-hand side, not having any other resistance areas on the left-hand side of the chart. What would be your next target? It's into the open. Where's it going to go? You don't have a measured move. How are you going to get in a trade when you don't have a measured move to the upside, where you don't know which way it's going to go? I have a tool that enables me, and it's an institutional tool, and institutional traders use this tool to have a measured move. Guess what? Because institutional traders are not getting in trades not knowing what the target is, not knowing where the next profit target is, okay? Also, how to trail a winning trade, because guess what? If you have a losing trade, no problem. There's a plan for that. You stop out and you're done, right? You're going to wait for the next trade to set up. But what happened if you have a winning trade? What happened if you have a winning trade? You have to know how to trail the trade in a proper manner so you get the maximum benefits from the move up, from the rally, or from the drop. You have to make sure that this trailing strategy enables you to juice up that particular trade. Make maximum profits on that without taking you out of the trade. Let the market take you out. Don't take yourself out of a good trade. Just don't take yourself out of a good trade. And what if I told you that, but I know if that certain image, I know at 9 o'clock, I'm looking at the chart of whatever it is, of whatever commodity, whatever mini that you throw at me, I know how to look at the daily chart, at one particular chart, at one particular candlestick, and I can tell you from that candlestick whether we're going to have a sideways day, whether we're going to have an up day, or we're going to have a down day. So by looking at one chart and one particular area on the chart, I can tell you exactly what's going to happen for the rest of the day. Okay, I think that's pretty amazing. Time flexibility. We were talking about time flexibility, and a lot of you guys have full-time jobs, and you probably want to switch to trading, make a career shift. Okay, and I'm going to share a story with you guys. Why I decided to trade on my own in my own accounts, and I actually run a hedge fund as well, so I do run a managed accounts program. Why I decided to take this on my own? It's because I was sick of commuting. I was commuting literally close to 3 hours every single day, an hour and a half to work and an hour and a half back, and I was getting so sick of this, so sick of this. So you might have your reasons. This was one of my reasons, and another reason that I had was the fact that I wasn't getting enough vacation time. I was only allowed to take about 1 week at a time. Well, guess what? If you want to plan a trip to Maui, that's off, because it takes you about 2 days to get there, right? Or a full day, 24 hours to get there, 24 hours, with flights and everything. and with transfers. So what are you going to do? Stay there about 3 days and done? So this is all about time flexibility. Time flexibility. So when you see a setup form like this, and this is in extended hours, guys, in extended hours, this is a 10-minute move. 10-minute move right here from 4:30 to 4:40. I had a $150 risk on this trade with one contract. One contract. And up here at $46, if you would have locked in at $46, it was a 50-cent move, more than a 50-cent move. It was about a 70-cent move. But if you would have captured only 50 cents of this move, and this happens, guys, every Tuesday at 4:30, you get a dynamic move either to the upside or the downside. And this is something that I teach in my class. So $50, $500 in less than 10 minutes. Okay? It could have went the other way, but guess what? You would have stopped out at $150. So what? I'm going to try it again next Tuesday. I'm going to try my strategy again next Tuesday. It's not that I'm going to try it. I'm going to do it because I'm committed. So you can literally make money in extended hours. Okay, this is another trade at CL. You can see the trade developed at 10 o'clock in the morning. So if you have the time to stay at home and day trade for about 2 hours a day, because my strategy is all about trading the first 2 hours of the day. And if the trade continues, don't get out of the trade just because your hours are up. Just start trailing. All you have to do is just push this little line on your platform lower. If you're in a short, that's how you're trailing it, right? Or push it just a little up. It's just a little finger effort. That's what it is. So you can see it right here. This is a trade. It is at 10 a.m., right? It is a breakdown. It is a beautiful move to the downside, $330 locked, okay? And this had a minimal risk of about $120, this trade. And we're up $330 with one contract. Remember I was telling you about copper and how copper was lining up really, really nicely? Okay, so guess what? In copper, I had a stop of $87.50. I literally had a very, very tight stop. Very, very tight stop. My entry was $2.15 right here. $2.15. So it was actually above this area right here. So you can see $2.50. It was here. So ignore the arrow. It should have been right here. Okay, this is my arrow. This was actually where I placed my trail after the first day, okay, after the first day. But literally, this was my entry, okay? So this trade with one contract in copper. See when it happened here? See when it happened? On the 27th, on the 27th. So that was last week, not in copper, last week at $2.15. And look at the results, $1,800. $1,800 with one contract, okay? So profit, let's take a look at another trade. And this is a trade that I've done on Halloween Monday. Halloween Monday, I got in silver. This setup right here that developed throughout the trading day was literally breathtaking. And this is my signature entry right here in my signature setup. And this is the bar that I got in. You can see my price, $17.84. Look at my size. I have a whopping one contract. Guys, this is one contract. The risk for this trade was $250. $250. My profit today, I took the snapshot at 1 o'clock, so it was about an hour and a half ago, right? This is my account right now, $4,250. This is my account right now with one contract, okay? With only one contract. Jennifer, I would gladly, you know, if you stick around till the end of the presentation, I have an invitation for you and where I literally show you how I trade, okay? So Jennifer, stick around. So look at my did I expect this? No way. No way. You know what my target was? My target was 18, and my target was 1820, okay? And then 1850. No way on earth I thought that it was going to go all the way to 1875. No. No way. I have calculated targets all the way into $19 and $20, but that's for a swing. But that's what I mean. If you don't have time, and literally, you know how I got in this trade? Do you think I just hit the button? No, I put in a limit order. So I didn't jump in. I said, I like this trade over 1784, or 17, actually it was 1785, but I got filled at 1784. So I put my entry way in advance. It was about an hour ahead it triggered. I didn't even know if it was going to trigger, so I set my alert for the stop, you know, in case it should turn the other way so I can cancel my entry. But you place them in time, so you don't have to worry about you know, you don't have to worry about your trade or about missing your trades. And I teach people, and I teach all my traders, guys, set alerts. That's why you have a really good platform. Set alerts. You don't have to sit and babysit your trades. And you only need a few trades, okay? But this is a trade this week, $4,200 with one contract, $250 risk. Here's another trade, guys, and this is coffee, and this was at the beginning of October. It was October 7th, okay? This is my entry bar literally right here, and this is a swing trade. You can see it, one contract. However, my risk on this trade, because it was a swing trade, so not a day trade. Some of you guys may like to swing trade and day trade at the same time. Some of you may only want a day trade, or some of you may only want a swing trade. I do both. I do both because it's a continuous market. I pop up my platform every Sunday at 6 o'clock, and I turn it off. I turn off my platform. I shut it off Friday at 5 o'clock. Other than that, it's on all day, all night. Whatever I'm doing, if I'm in the kitchen doing something, or even if I have people over and I'm entertaining, you know, guess what I do? I just go walk by my computer, and I have my charts up, and just to see if anything is setting up. And guess what? I have my phone with me all the time, and if something alerts me, because I set alerts, if something alerts me, or if I'm not in the house, I either have an alert and a limit order, or guess what I do? I have an alert, buy market or sell market. Nothing rushed. Everything is pre-calculated before. So I don't have to rush into like, oh, I'm buying here, I'm shorting here. It's not like that. Trading should not be pressured like that. Okay, so profits that made me feel like, literally profits that made me feel like this, jump up and down, right? All right, let's take a look at a trade, and this is from yesterday, 30-year bond, and this is part of a swing trade. Okay, so again, some of you may like to day trade, some of you may like to swing trade, some of you may like to do both. You could do both. It depends on your time, and it depends on your risk tolerance. Because swing trading involves a little bit of larger risk. Okay, sometimes it requires a larger risk. In this case, it required $570, and the reason why I didn't position size for either of these trades is because I wanted to show you guys what you can do with one account, with one contract. Okay, this is one contract right here, one contract. You can see it. My entry 162.21, which is right here. Look at this rocket bar. This is humongous. This is my entry because it fit my entry based on another time frame. And by the way, this is a 30-minute chart. Right now, I took this picture. I took this image at 1 o'clock today. So today, I'm up $1,000 in the 30-year bond trade right here. Okay, so profit is over. You can see it right here. And now the trade is still open. I am still in the trade. I'm still in this trade. Okay, I'm still in this trade. Okay, let's talk about the 10-year bond because this is another trade that I took. Guess when? Yesterday, when everybody was saying, you know what, I'm going to go cash, I'm not going to do anything, I'm going to sit on my hands, and this is kind of choppy, this is kind of crazy, I'm not going to trade this, I'm losing money. I'm not, because I have a plan and I have a system. So this is my entry right here. You can see it, one contract. Guys, one contract. My risk, $140 on this trade, and this is where the trade is right now, $484 in total. Up on the day, I'm up on today alone, $328 today. But overall, since I opened the trade yesterday, I'm up $484. So the trade is still open and it's going strong. It's still going strong. So let's do some easy math. I closed my copper trade from last week. yesterday. So I made $1,800. I'm up $4,250 in my silver. I'm up 1,100 in bonds average and about 450 in the 10-year bonds, right? So this is with one contract, and my profit is, as of today, Wednesday, so in 3 days, well, basically I'm cheating a little because I closed the trade, and this is from last week because I initiated the trade last week. But guess what? I took profits this week. I took profits yesterday, so why not? I'm including it. $7,600 using one contract per trade, knowing when to get in, where to place your stop, know how to trail the trade. And not only that, but I think most important thing right here is knowing the price areas and the price zones and the trigger times. These are the most important elements in the trade. So bottom line, whether you're day trading or swing trading, anything on the planet, whether you're still convinced that your stock trading is gonna skyrocket and you still love stocks, you have a love affair with stocks, which I do, because I have to admit I love trading stocks, but I only swing trade them. And I love stock. I mean, I'm addicted. Okay, so I can't do anything about it, but I day trade futures. So in trading, you should only have 4 outcomes. And a very good friend of mine shared this with me. He said, you got to have big wins, small wins, break-even trades, and small losses. This is what it comes to. You have to have only 4 outcomes. So big wins, they happen unexpectedly. Small wins as well, you know how to trail and trail the very stop. Break even. Guys, once you're up in the trade, make sure you pump it up, pump your stop so you have a break-even trade for the remainder of the trade. But again, there are price points when you can do that. And if you know these price points, when to place that break-even in the trade, you're golden. Because that's what I use. That's how I lock in profit. And that's why sometimes I get like little profit. But guess what? It's a small win. I take it as a win. It's not a stop loss. And small losses, like I said, small losses happen. They happen. But your losses need to be small. They need to be controlled. And once you have a hard stop in, you're done. You're done. You have to place your hard stop. This is a 2-minute chart, and these are opportunities all throughout your charts, throughout your trading days. 2-minute chart, and this is the E-mini NASDAQ. This is one of our signature 935 strategy. 935 strategy, 945 strategy. This is it, and we know when to short. Do you think we're going to wait for the setup right here to trade under this candlestick? No, we take it right here at the very top on the second or the third candlestick. This is what we do. And we have very tight stops. Okay, and you can see that we have beautiful move to the downside. We know how to calculate projected targets, and actually in this case, our target was 47.50, but it never got into that place. So guess what? Our trailing system kicked in, and we were out of this trade here into this area, so it was about 62. We talked about this CL move, and this happens every Tuesday. So this is a strategy that we teach, and Tuesdays at 4:30, there are some oil numbers that are being released, and also on Wednesday. We don't trade the Wednesday at 10:30 move because it's way too crazy, but these numbers we trade. Also, you can make money before the market opens. So I just want to show you real quick that if you have and if you know your strategy and your entry points, your price points, and your perfect timing in the market, you can literally make money before the market even opens. And you can see right here, I am short 2 contracts because I had a really small risk of $100 risk in this ES short, and this is the E-mini S&P 500. So I took this short. You can see the price point right here. It was at 2001 and up $350 on this trade. Up $350 on this trade. Let's move on. Another trade. YM short again at 9:30 a.m. before the market opens. So you don't have to wait for the New York session to open. You can trade before that. You can trade after that. In my class, I teach you the exact sweet spots when you can maximize your wins with these trading strategies, whether you're trading the London session or whether you're trading the Asian session. The Asian session is a little tricky, or whether you're trading the New York session. Okay, so I teach you all these things in my classes. So you could see this trade. I actually had 5 contracts short. I covered 5, so I locked in. I locked in some profits, and I let the trade continue lower. And you can see my stop right here, my stop. So guess what? If it's going to this green little spot right here, I'm trailed out. I'm done. Okay, but I give it a little room to breathe. Remember, guys, these trades are like living, breathing organisms. They need to wiggle. Every single, swing low to high is like an inhale, and then the pullback is like an exhale. So you have to give them a little bit of wiggle room. So don't choke them, guys. Okay. All right, so here's another trade in CL, and this was literally a fraction of a minute scalp. The entry was 46.75. The stop was 5 points, so very, very tight. The target was 46.60. You can see it right here, in, all out. And for this trade, I position size $500 on the day. Boom, done. So once you book your profits, you have time to do the things that you love most. And the beauty about futures is that it doesn't keep you chained in front of the computer. So it's time to put the fun in funding your life. Okay, this is the trading universe, and I promise you that I'm going to speak about the trading universe. So what do I trade on a day-to-day basis? I trade the E-mini Dow, the E-mini S&P 500, and the E-mini NASDAQ. This is what I trade on a day-to-day basis. I don't trade the Russell. I don't trade the Nikkei. I don't trade the Euro. I don't trade the DAX. I don't trade the VIX. I just trade these 3 indices. Out of the energy stocks, I just trade the crude oil. That's all I trade. So I trade these 3. I trade crude oil. I love recently to look at bonds because bonds are on the move, and they're actually, breaking out and doing some really nice swings. So I love to focus on the 30-year bond and the 10-year bond. More of a swing trading than day trading. You can literally day trade, and I do have several of my students that are specialized, and that's what I teach in the class. You should specialize in one thing. One of them is specialized in, actually 2 of them are specialized in the 30-year bond, and this is what they do on a day-to-day basis. They only trade in the morning. They trade from 9 o'clock. No, they actually trade from 8 o'clock to about 10:30 a.m., and that's what they do. From softs, these are also great, but guess what? These are going to be our swing trades. Sugar, I have an alert in sugar. I love to take a swing trade in sugar. We're going to talk about this. I'm going to show you the chart. And also, these are more for swing trades. Coffee, I had a phenomenal trade in coffee. I'm going to share it with you as well. I have it here. Phenomenal trade in coffee. It was also a swing trade. And again, guys, was only with 1 contract. Metals, gold and silver. Obviously, I showed you the trade in silver and in gold. If you have been listening into my YouTube videos, I've been talking about a swing long in gold off the lows and why I decided to pick gold off the lows, and also have a swing trade in GDX and in stocks actually. But I was talking for about a month, and it reached my target today, 1,300. Done. I'm done. Okay, so I don't care what happens in the market. I have winning trades. I know how to hedge my portfolio, so this is phenomenal. And also, guys, I had a trade last night that I put on, but so I had NQ long if it traded above a certain number, and I had ES short, and I covered around midnight. I had a really nice drop, and Q never triggered. So you can hedge yourself. You can hedge between your trades, because when they're basing and when you don't know what the next possible move is going to be, guess what? You take the relative strong one and you go long, and you take the relative weak one and you go short. And one cancel the other, obviously. Okay, other than that, I trade copper, and also, and basically these live cattle, lean hogs, soybean meal, etc. These are more even corn, canola, and etc. These are more for swing trading purposes. These are more for swing trading purposes, and as well as currencies as well. Okay, so these basically my trading universe consists in mini indices like Dow, S&P 500, and Nasdaq, oil, and gold. Basically, these I watch on a daily basis. Obviously, you can watch the dollar, right? You can literally watch the dollar and trade the dollar, and with minimum risks as well. And these have the best potential. So, guys, when it comes to trading and trading real money and trading your account, think wisely and don't be caught like this, like, oh, is the market lower? What's the market going to do? Stop guessing and trade what you have in front of you. Don't be afraid if the market is lower, because we can trade short, and don't be afraid if the market is higher. Obviously, you can take a long. So a confident trader is an educated trader, and you literally don't have to care what the market is doing as long as you know how to read the market and you know how to read the psychology behind the candlesticks. Time flexibility. This is a market that is open close to 24 hours a day. Close to 24 hours a day. Obviously, there's some break from 4:15 to about 6 o'clock. And then at 6 p.m. Eastern Time, the new trading day begins. So you have time flexibility. You have time to look at the market. You have time to see strategies. Like last night when I was looking at this hedge trade at NQ, and actually I was looking at YM, but I picked ES because it was chart-wise it was weaker. It was I think it was about 9 o'clock, and at midnight I closed the trade. Why? Because I had alerts. So I had targets set, but I didn't have profit targets set in, so I had alerts because I wanted to still be in the trading in case we're going to get a crash through the night. I wanted to be in it. And I came to my computer close to midnight, and guess what I did? I just clicked cancel on my NQ trade, took my profits in ES, and moved on. Gaps. A lot of you that are day trading and their day trading stocks are intimidated by gaps, and I understand, because in gaps, and with gaps, you need to be very aware, and you need to know how to read the market precisely. And when I'm talking about that, I'm talking about the 7 layers of support resistance. And now you're going to go like, what? 7 layers support resistance? Well, I thought it's like supply and demand, and that's about it. No. You only know about 10% what you need to know about, because there are 7 layers of support resistance, which we teach in the class. So if you don't know how to read these 7 layers of support resistance, guess what? You cannot trade gaps. You need to identify the trend correctly. You need to identify the pullback areas correctly. You need to identify the swing lows and swing highs, and there are a multitude of levels that you need to identify before trading a gap. But guess what? In futures trading, because futures is close to a 24-hour market, you have no gaps. So this is one other advantage that you have over trading, let's say, trading the market indices. Let's say you're a stock trader and you're trading the Qs or you're trading the SPYs, and the next day you're going to wake up and say, oh my goodness, it gapped down and I'm long, and what am I going to do? But guess what? If you would have traded the E-mini S&P 500, which is basically the same chart as the SPY, right? You would have had a stop in, and you would have stopped out unless of doubling or tripling your loss along the way. Okay, so let's talk a little bit about tax advantages. You have lower effective income tax rates with trading futures. You have simplified reporting on your tax return, and guess what? You don't have to pay an accountant thousands of dollars just to do your taxes like I do at the end of each year. I literally pay around $8,000. So that is a major cost reduction right there, because your broker is going to send you a 1099-B form, which you're actually going to fill it in and send it with your tax return. So that's all. If you want to be a complete futures trader, and if you don't want to have anything to do with stocks, this is easy reporting for you. Life becomes easy. 1099-B form, they send it at the end of the year, you're done. Plus, for those of you that are interested more into advantages about trading futures, 60-40 rule. Those of you that know and do their own taxes know what I'm talking about. For those of you that don't know what I'm talking about, you could actually Google this 60-by-40 rule or tax advantages of trading futures, and there actually you're going to find tons of examples of how this rule is actually going to put more money in your pocket at the end of each year. And a full-time futures trader may have additional tax benefits with trader tax status from the IRS. Love this. A lot of deductions. Look into it. There is a lot of advantages that come with trading futures. Fast money. And by we, I mean futures traders, we trade with 10 times as much exposure than normal stocks. So prices in the futures market tend to move faster than in the cash or the spot markets. Is this market fair? Okay, well, let's think about it. Guess what? We're not trading stocks where, you can pump and dump, and especially if you're trading penny stocks or low price stocks or even, higher price stocks. There's pump and dump. You get into a chat room of 3,000 people out there, and if they're calling a trade, that trades only, let's say, 80,000 shares that day, that's a pump and dump. That room can literally do the pump and dump. So they can get in and they push the price, they post a trade in the chat room, everybody gets in, and guess what they do? They get out. So that's what they profit. They profit on that small pop, okay? So there's no pump and dump in futures. Rumors. Guys, there's no rumors. What is a rumor going to be about? Oh, the S&P 500 is going to go here. The S&P 500 is going to, so NQ is going to buy out the S&P 500. No, there's no such thing. No rumors, guys. So rest assured that everything is basic. There's no stock manipulation. There's no downgrades or upgrades, okay? No earnings surprises, because literally earnings is actually the driver, the catalyst behind the move in all these indices, right? Because we get a really good engine behind these indices when stocks like Google and Amazon and Netflix and so report earnings, because they power up or they power down, okay? But guess what? These are working in our advantage, okay? So there's no rush into trading a gap. Also, no takeovers. One of the things is that the futures market is very liquid. So if you're worried about liquidity, if you're worried about volume, think about this. ES liquidity, over 2.3 million transactions per day happen every single day on a day-to-day basis. Futures contracts are traded in huge numbers every single day, and the constant presence of buyers, sellers in the futures market ensure market orders can be placed quickly. And literally, there are no slippages if you're trading, and regardless when you're trading. If you put in the limit order there, you're going to get filled there. Low commissions. This is another thing that I love about trading futures, because commissions are very low and are charged when the position is closed, obviously, but they're very, very low. They're very low. I pay about $2.05 with Thinkorswim, but this is because I trade a little bit of size. But you're going to probably start up at $3 in $3, then $3. So I think it's in and out or something. I don't know for the retail trader what the commissions are, but you can actually talk to your broker. And the more you trade futures, or even if you trade one contract, but if you trade on a day-to-day basis, after 2 or 3 months, you could call them in and you could actually ask for a commission reduction. Both sides, you could trade both sides of the coin. What does that mean? Short and long. Guess what? Earlier this year, and I think this was back in January or February, futures market were a little flat, were a little unstable, and I thought to myself, why not, find something to day trade, because I have a scanner. So I started scanning and there was nothing moving on that day, and I really wanted, because I was here from 9 o'clock, I wanted to put in my trade until 11 o'clock, so I wanted to make some money, but literally there was nothing moving. So I found an opportunity, and at the time it was X. So I pulled X. Because I'm so used to futures getting long or short whatever I want to, because when I hit my short button, guess what? Hard to borrow. So I scanned and scanned literally, and I think I went through about 50, 55 stocks before I found X. And then when I wanted to short it, it was hard to borrow. So guess what? In futures, there's no such thing as hard to borrow. You could go easily long and short, whatever you want. Plus, you can also hedge, which is Beautiful, right? All right, conclusion, stocks versus futures. So if you're not a futures believer, okay, let me give you some other reasons. Okay, so stocks. You need a large account size in order to make money. So $25,000 is the minimum, but like I told you, you need about $30,000 in your account, because if you fall below $25,000, you don't have the day trading status anymore. And you have to have large position moves. Like you have to make 50 cents, 80 cents, whether you're going to make this in a trade or 3 trades or 10 trades, but if you make it in 10 trades, your commissions are going to eat up all your profit. So you have to have a large position move. You have more charts. You literally have more charts, and you have close to 6,000 stocks that you need to scan on a regular basis. Whether you use a scanner or you use the built-in platform scanner or whatever your method is or your trading universe is, you still have to scan. So because you have to scan, you have to go through stocks and stocks and stocks and stocks, you get less focused, okay? Because you're going to miss moves. You look at a stock, let's say you look at Apple, and then you pull up another chart and you see a setup in Apple, but then it's not ready yet for you. It's not at the trigger point ready. So you move to a different stock, and by the time you go through 5 or 6 stocks, you go back to Apple, you see that you've missed the trade because it already triggered. Versus futures, where you can make money with a small account. With $5,000, you can day trade. You could literally make a living day trading. So I showed you some results from day trading and swing trading. If you want to choose only day trading, this is fine. If you want to choose only swing trading, it's your choice. Greater leverage, much greater leverage than trading stocks. Also, smaller position moves. You only need 5 points, 10 points, 20 points. Sometimes when you get fluidity like we had yesterday, and okay, I know I didn't trade, but today also we had a really nice move to the downside. You get smaller, you get smaller position moves. You get to make a lot of money. In fluid days like yesterday and today, you could have made a fortune. Also, more focus. You're only watching a few charts, and on a day-to-day basis, I only watch 5 charts, guys. 5 charts. E-mini Dow, E-mini Nasdaq, E-mini S&P 500, gold and oil. That's what I watch for my day trading purposes. I have the other list with another 6 commodities that I watch, but these are more for swing trading purposes. So I have them on a different window on a different screen. But if you're focused on into day trading, if you only want to day trade 2 hours a day from 9 o'clock to 11 o'clock, and you don't even have to trade within those 2 hours, because basically from 9 o'clock till 9:30 you do your homework, and then from 9:30 you actually look for an entry opportunity, and then let's say you find a trade at 9:45 and you get in at 9:45, and if you don't have the market follow through, you could be in that trade, let's say, for half an hour or 45 minutes by 11 o'clock. Okay, so this is your main focus time. You're in and out in less than 2 hours, but you need a little bit of homework. So guess what, guys? You got to roll up your sleeves and you have to do your homework, because guess what? If you're getting into a chat room, you're trading someone else's trading plan. Wouldn't you want to be your own signal provider, your own signal service? I'm definitely more for that. I don't want to follow someone else's plan, right? And blame someone else, because we're getting into that non-commitment level where we're saying, oh, but it was his fault. He gave me that trade. I'm losing because of so-and-so in that chat room. Oh, they posted that, okay? So no, take action for your own decisions. Also, you can take a short position more easily, and we talked about that. There's central clearing, reliable volume data, tons of volume in the market. Great for hedging, guys. So if you're, I don't know, if you're along the market, you could hedge with gold, or you could hedge with something else. Also, no earnings. You don't have to worry about earnings. You don't have to worry about all these stocks that are reporting earnings. Guess what? If you're a swing trader, you're constantly, like me, and you're going like, oh my gosh, what stocks am I in? What stocks are reporting tomorrow? So you're into a lot of dealing with a lot of things when these earnings pop up. No gaps. No gaps, so you don't have to worry about gaps because it's a continuous market. You have extended hours. Your new trading day starts at 6 p.m. Eastern Time. 6 p.m. Eastern Time. And you can take a trade You can take trades anytime. Asian session, London session. Guess what? I love trading the London session. Love trading the New York session. You know why the New York session is so powerful? The New York session is so powerful because you have London traders that are overlapping the New York session, and you have European traders and American traders that are trading both. That's the kind of volume that you have trading futures. It's not like the New York stock market where you have the stock market that is traded, basically that is traded by the US, right? You have better commissions, and we talked about the commissions, and this is something, and there are actually better commissions with Interactive Broker, with TradeStation, with a lot of brokers that are out there. Ninja Trader. I have so many students that are trading with so many brokers. Literally, you don't need to use a scanner. So you don't need a scanner, which is phenomenal. I use a scanner because I swing trade, but if I didn't swing trade and I didn't have my hedge fund, I would need a scanner. So that is an extra cost that is added to everything else. And also, no indicators. Do you think that institutional traders trade based on indicators? No, they don't. Price action is key right here. So bottom line, you can start your day trading career with $5,000 and your potential income can be literally $500 a day. Are you going to make that day in, day out? No, you're not. But you can make $500 today. You can lose $500 tomorrow. You can make $300 the next day, or you can lose $800, and then you can have a day where you can make $1,000 and you're still coming ahead through the week at the beginner stage. This is the beginner's trade right here with one contract, and you can see here that this was the entry. The risk was about $100. You can see our entry right here. And I took the extended hours off. Extended hours off so I can compress the chart, so I can show it to you guys, so it makes much more sense. So this is the entry right here. Remember, very aggressive entry, 2-minute chart, and I had a $100 profit with a $100 risk with one contract. It went up, trailed out, $200 profit, 2-to-1, perfect. It's good in my book. Second trade, I didn't short it right here because I did not have the conviction to short here. My plan did not say to short. My plan said long, long, long. So I waited for the long opportunity, got in here, also one contract. Risk was again $100, and the profit in this case by trailing out was about around here at 80, was about $300. So that is $500 with one contract. And you can see it right here. From the open, it happened on a Tuesday. From the open, 9:30 a.m. all the way into 10 o'clock, and the other trade lined up after 10 o'clock. It was 10:10 and done. But you could see it right here, trailed out by 10:45. Right here, 10:45, done. 2 trades done, $500. So trade smart and not hard, and use your own knowledge. The power is in you. You need to make your own trading decision. You need to see your own trades act on the chart. You need to live and breathe charts. The charts at one point need to speak to you. When charts start speaking to you, it means that, yes, you've got it. You know what you're doing. Okay, if you're staring at charts right now saying, I don't know what I'm doing, I would rather follow someone else, it's time for you to go back and get some good solid education. So people think that there's some magic shortcut to success. Well, actually there isn't. It's all about hard work, dedication to get where you want to be. And this is my next trade. So I promised you guys that I'm going to give you something. I'm going to offer you something. This is the next trade that I'm looking for. I'm looking for a pullback right here. I had an alert. Unfortunately, I had to come in this. I couldn't get it. I had to come in this class, and then I have an alert at $21.60 right here for swing sugar. So think about this. There are 60 days left until Christmas, so power up, ready, set, and start trading the right way. I have a class that is coming up. Learn how to trade the New York Open. It's a live webinar. It's on November 7th. It's Monday, November 7th, so it's a few days away. It's at 7 p.m. Eastern Time. It's about an hour and a half if we have a lot of questions. Jennifer, if you're still here, I'm going to show you how to input orders, and basically I'm going to show you how to correctly perform a pre-market analysis and how I do it. And also how to select the trade of the day, what to trade and what to look for, how to do that relative strength, relative weakness, how to pick what to trade, and also how to execute and how to plan and execute your trade. Because basically, guys, your charts are your employees, and you're the boss. You have to tell them what to do. So if I want NQ to go higher, okay, I put an order for NQ higher. If I want ES lower, I'm going to put an order for ES lower. And based on your knowledge, because you're transferring your knowledge, you're absorbing. So at that point, the chart is going to tell you what you need to do. So if you want to register for this free class, guys, this is a $595 class tuition that is being waived. I'm offering this just for you guys that are here today. That's it. So just for those that are present here today, learn how to trade the New York Open live webinar free. You just go in to tradeoutloud.com/open and you sign up for the class. That's all you need to do, and you will be receiving updates on the class and so on and so forth until the class starts. Register now. Seats are very limited. And I already see my email just going off right now, and I see that there, a lot of you are just hitting already this link right here. So I'm sorry if I didn't have enough time to answer a lot of your questions. Feel free to hop into my webinar on Monday, where I'm going to promise you, I'm going to take time aside, 30 minutes, and answer questions for the whole duration. 30 minutes is going to be only questions. So thank you so much for having here. Okay, so I'm just going really quick. Guys, shoot me an email, info@tradeoutloud.com. I don't trade weekly credit spreads. I don't do options. I'm enthusiastic. Yes, because I love what I'm doing. I love what I'm doing. I wouldn't be doing what I'm doing if I wasn't, if I didn't. You have to believe in it and you have to love it, okay? So sporadically. I actually had a year off last year from trading and education. So thank you so much, guys, for having me here. Thank you, Dan, and thank you, Winvesting. And I hope you all have a great rest of the day and great presentations up to come.